Dollars are debt.
This is Ray Dalio, billionaire investor, one of the richest men in the world, telling you that the United States dollar is dead. You should be opting out now and investing into harder assets, Bitcoin, gold, real estate, and cryptocurrency, guys. Do your research right now is the time to be opting out with everything going on. You'll want to be making investments to help you later in the future. Crypto family, welcome back to the channel. Aaron here, coming back at you with another cryptocurrency video. If you're new to the channel, please consider subscribing. We have new videos coming out every single day. And as you just saw in that clip, we'll be checking out Ray Dalio's thoughts on the United States dollar, how you can invest during a time like this when the dollar is dying. He'll also be telling you guys why he believes the United States dollar is declining right now. So a lot of great and useful information in today's video. Recommend you guys watch all the way to the end. And we're going to start off looking at a clip where he's telling you how you should be structuring your portfolio during a time like right now. So let's go ahead and jump into it here.
That first tier of saving should be based on, am I going to have enough money, enough buying power for my needs? And that tier should be well saved and almost have it diversified, well diversified in good things. So things that do well when conditions improve, like, the stock market and so on, and do well when things do badly. That might be gold or, others, think about that. The way I like to think about it is there are two main drivers, and they can go up or down. And the markets reflect those things. So if you think about, what are they? Inflation and growth. And then inflation can rise or fall, and growth can rise and fall. And if you can have a balanced portfolio of those, like 25% of your risk in each one of the portfolios that would do well if that happened, you have a balanced portfolio. Then you're going to have an element of diversification so that you're not exposed to too much one scenario. And once you've got that portfolio established, so you can think, how many weeks, months, years can I live if, on that? And so you have your safety bulletproof portfolio that, but it can't be in cash. Like, people think, cash is the least risk investment because I hold it and it doesn't go up and down, and I receive my interest rate. Well, it depends on the interest rate that you have in relation to the inflation rate, because otherwise you can have a bad result because of inflation. So you have to think about it in real buying power, and you have to have it as a diversified portfolio. So those are the things that I would emphasize to do, and to have it also diversified internationally.
So Ray mentioned having international investments to keep your portfolio balanced. And what's really interesting is people on our channel in the crypto space and Bitcoin, we kind of already checked that box with things like Bitcoin and cryptocurrency because they are international products. Anybody can opt in and use Bitcoin and crypto. So we definitely checked that mark. But Ray does think about it a little bit differently. This is what he has to say about investing internationally. Let's check it out here.
That the three things I look at most is how's the finances? Is the country, just like a company or an individual, are they earning more than they're spending? So they have a good income statement. Do they have a good balance sheet? Second, do they have internal order or disorder? And third, are they going to have a conflict? I'm not saying get out of the United States, and I'm not saying get totally out of China. Okay. I think that as a general rule, I want to have my risk broken up into 10 to 15 uncorrelated good assets. And so that means I don't want to have more than 10%, ideally not more than 7.5%, in any one of those good assets. And if I'm judging goodness, I'm judging it by, what's their income statement, finances like? Are they having internal conflict, and are they in the midst of being in a war? I want to stay away generally for those, but I still want some of those portfolios in that. So that's good diversification for me. Dollars are debt. In other words, when one holds a dollar, a central bank, they hold a debt asset. And generally speaking, the world is holding a lot of US dollar denominated debt. So the holders of that would say, I'm already overexposed to US dollar denominated debt. And so there's less of a eagerness to buy the debt. And that eagerness to buy the debt is also reduced by, two main things. One is the United States share of world trade has gone down and China's has gone up. And so you save really for using spending internationally for that reason. And then also sanctions have increased the perceived risk that those debt assets can be frozen in the way that they've been frozen for Russia. So around the world, different countries increasingly have that risk. So for those reasons, there's less desire to hold U.S. dollar denominated debt, which means less U.S. dollars. So the supply demand picture is worsening, particularly as we continue to have to sell them internationally to fund the deficit.
So in the next clip here, Ray talks about his thoughts on Bitcoin. And he isn't a huge Bitcoin guy. He's liked Bitcoin in the past. He's flip-flopped a couple of times, but he really doesn't like BTC too much. He says it's a worse gold. He talks about it more in this clip that you guys will see, but it's always great to get a different perspective from somebody who's been as successful as Ray Dalio. Even though the Bitcoin bros don't 100% agree with him, he also says some things that would make you think that he would like Bitcoin. Like, it is a newer asset. It has a lot more upside potential than some of the other traditional assets. But because he's already worth billions and billions of dollars, he's not trying to create a lot of wealth. He's trying to just maintain his wealth. So that's probably why he doesn't dabble in Bitcoin and crypto as much. But let's go ahead and see what he has to say about Bitcoin, and leave your thoughts on it in the comment section below.
Bitcoin is neither an effective storehold of wealth or a medium of exchange. So it's not an effective currency. It has a volatility to it that has no relation to practically anything. The owners of it goes down because, let's say, if people in the tech business like it, and then there's a tech problem, then they sell it to raise things and so on and so forth. So it has, it's not an effective. It's a very, very poor alternative to gold. Okay, we can get into why that is. Central banks, by the way, own gold, and it's their third largest reserve. And U.S. dollars, euros, gold, and then yen, and it's got the history of it. And one can say it's not digital, and what, I don't know, but I would. So we're not, and they can outlaw it, they can regulate it. Central banks and countries pretty much don't want it anyway. So it's not a good viable alternative. If one wants to say, maybe maybe all that's wrong and doesn't matter and so on. And like I say, you have to assume, like I said then, that it goes down 80%. You can have it go down 80%. And if you want to have a little bit on it, you can have it. It's not a big asset. It gets an amount of attention, which is way out of proportion to its size. It's, I don't know, like 25% of the size of Microsoft, and that's one stock in a world that has a lot of assets and stock markets in it. So that's what I think.
Hey guys, thanks for watching all the way to the end of the video. If you enjoyed, make sure to hit that like button, subscribe for more. And if you want to get access to our exclusive content, the link will be in the description below for our Patreon. But thank you again. And my name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one, and have a great rest of your day.